For a lender, when you send over information in piecemeal and it's conflicting and it's slow, that risk percentage is
Mm,
going up,
yeah.
that interest rate is going up. So when
Yeah.
you can confidently share data in seconds,
Yeah.
that says to that lender or potential investor, you've got your act together.
Welcome back, everyone, to the Commercial Real Estate Podcast Unfiltered. We are here to talk about all kinds of things commercial real estate related, and I'm excited today to have Jeri Frank on the show. She's transforming how commercial real estate portfolios are managed in the digital age. As co-founder and CEO of STRATAFOLIO, she's on a mission to pull the industry out of the 1990s spreadsheet technology into modern AI-powered property management. A real estate investor herself, Jeri combines firsthand landlord experience with deep technical expertise to solve the problems she's lived through: missed rent escalations, manual CAM reconciliations, and spreadsheet chaos that leaves millions on the table. Thank you so
Mhm.
much for being here, Jeri. I'm excited to have this conversation with you.
Thank you. Glad to be here. I always love talking about how we solve problems for people.
Yeah, and I think it's one of the reasons why I started the podcast is that there's so much misinformation or lack of information or access to that information that we want to
Mhm.
get this in front of as many people as possible and help. So Jeri,
Yeah.
maybe give us a little bit of background of how you got into real estate investing, property management. Has that always been your career path? And would just love to hear a little bit of background.
Yeah. So it was not something I grew up said I was going to do, but life happens. And so my husband and I used to work in the corporate world. I worked in education, and my husband worked in the aerospace industry. He was a senior software systems engineer, and we were taking bonuses and buying real estate and redoing spreadsheets every single month. And any engineer or person who is concerned about working efficiently knows that is a mistake. And so that really just became the catalyst for us figuring out what should be out there and seeing if there was anything out there.
Yeah.
And we searched, and there was some stuff out there, but nothing was really scratching our itch. And we had the opportunity to work with some local real estate investors and go through a accelerator program. And we learned a lot through that activity. We went through an alpha stage, we went through a beta stage, and some key findings that came out of that beta stage are now core to what is Stratafolio.
Got it. Got it. So tell us a little bit more of what Stratafolio is and what function it serves.
Yeah, Stratafolio is the commercial property management layer for anyone who uses QuickBooks. So if you are a small to mid-size owner operator manager, you probably are using QuickBooks because that
Yeah.
is the most predominant accounting system that's out there.
Yeah.
And I'm here to tell you that you don't have to use QuickBooks and 10 spreadsheets to manage your portfolio. There
Yeah.
is a solution for that.
Yeah, and one of the things that you talk about is the hidden revenue crisis. Can you talk to
Hmm.
us what you mean by that?
Yeah, I feel like this is my soapbox in some ways
Great.
because it everybody knows you should not miss a lease escalation. And I really when we see it, because we do a full service onboarding. So we see when revenue is missed because of missed escalations. The harder thing to track though is CAM reconciliation. And in an ideal world, you should have a budget, should reconcile to that budget, and quickly in the start of the year know the difference and either charge or don't. What we see very frequently though is people are think it's a very complex process,
Mm.
and so they don't do it.
Yeah.
So whatever that lease started at is where they continue to stay at. And I'm sure everybody has seen that insurance and taxes at the very least have gone up, not to
Absolutely.
mention their operating expenses. And so that just keeps eating away at the bottom line. And if you have caps on there, wow, you have messed that up for years to come.
Yeah.
And
Yeah. And can you talk a little bit what those caps are? I don't think we've really touched on this podcast. This is our world.
yeah,
I know we know what that is, but maybe for our audience share, what do you mean by
yeah,
caps?
yeah, happens a lot on landscaping, for instance. So if you have a property Maybe that tenant has said that there is a $5,000 a year cap on any expenses associated with lawn care and landscaping.
Yep.
And let's just say you are halfway through the year and you've spent $1,000. If you're paying attention, you would go find $4,000 of effort so that you can keep that property where you want it. Because if you don't spend up to that cap, you have missed that opportunity.
Yeah, absolutely. And I know that property managers that I've worked alongside, and I don't do property management myself, but like this whole reconciliation process seems to be like it's a 3-month, 12-hour a day process. And does it need to be that complicated?
It doesn't. We in STRATAFOLIO, you can do CAM reconciliation in one click, and it's all
What?
driven from QuickBooks. So you're not exporting, pulling out all the leases, redoing the
Yeah.
spreadsheets, having somebody check your work. You set it up once,
Mm.
and every tenant can be different. We know they are.
Yep.
And you just press that button, those expenses flow through, and then you're able to export a spreadsheet that you can then share with your tenant in January. And
Not
so,
March.
right.
March 31st.
So you've saved yourself hours of work and frustration, and you can get that out earlier. It's a professional way to deal with your tenants so that they
Yeah.
can then adjust in January for the rest of the year instead of adjusting in March and then having a catch up invoice.
Yep. Which
And
tenants
then
do
it's
not like.
right, they don't. And it creates a cash flow issue for both sides. It's a cash flow issue if the owner or manager is doing that doing the reconciliation
Yeah.
and carrying it too long, creates cash flow issue there, and it creates a
Mm.
cash flow issue for that tenant if all of a sudden in June they
Yeah.
have to come up with that last year's delta and the delta for the first part of the year for the new year.
Yeah, absolutely. Why do you think so many property owners and property management companies are still relying on the spreadsheets?
There's a few things. I've talked a lot about the silver tsunami, and we work with a lot of family offices, a lot of generational families where somebody has been in these spreadsheets for a long time. That is their comfort zone,
Yeah.
and they've done it successfully for decades, and they feel good there. They know they can do it. It might take them a long time. They've
Yeah.
just acknowledged this is what it takes. But at some point, that next generation comes in and says, "Whoa, you got to be kidding me. This is not real. You're making me do this every single time over and over." And then, so that next generation is shaking things up, I think.
Yeah. Yeah.
And so they're feeling compelled to do it.
Yeah, absolutely. How does technology help eliminate some of the mistakes that can be found by not being on top of things?
Yeah. So, the three most common reasons that clients reach out to us or prospects originally reach out to us is one, they missed a lease escalation. Sadly, if it's a good thing is if they've only missed that escalation for 1 month,
Yeah.
but sometimes it's years.
Ugh.
And that's an awkward situation because you haven't said anything. So, you as the owner, it looks bad on you. So, a
Yeah.
lot of times the owners just eat it. So, that's number one. Number two, they are struggling to complete CAM reconciliation efficiently at all in a timely basis. So that's number two. And the third is the risk that comes with not managing certificates of insurance for their tenants well.
Yeah.
And we have a way that we do that through AI and put the responsibility directly on the tenant to
Mm.
provide that instead of the owner calling, emailing, texting. We put that responsibility on the tenant to react, and then they can just upload their COI, and then the owner or manager only has to get involved when the tenant does not get involved.
So what do you think beyond that now that the younger generation's getting more involved in these family-owned properties that have been in the family for generations?
Mhm.
Beyond that, what's driving the shift towards modernization in commercial real estate right now?
I think that there is this realization that they can't afford mistakes. They have to be making sure that they're pulling all of the income out of those properties that they are owed, and they have to do it in an efficient way. So adding extra staff is not always the answer.
Right.
And staff, they are expensive, and it's hard to train somebody up to do something the way you were doing it in a spreadsheet, when spreadsheets are open for interpretation.
Yeah.
And yeah.
Absolutely. What can owners do today? Obviously, they can reach out to you to future proof their
Mhm.
assets and their portfolios.
Yeah, they should reach out and schedule some time with me. I'm not a hard sell at all. I really, truly enjoy understanding what is going on. And I will tell people if I don't think we're a good fit for them. But if they own any type of multi-year lease commercial real estate and they use QuickBooks, we should probably talk, because we can automate so many of the things that they're probably doing in spreadsheets.
Yeah, and I've worked with some family-owned properties where they've got different types of leases in the same property. How do
Mhm.
you deal with that challenge, right? Because if someone's got 4 more years left on their or modified gross lease, and the
Mhm.
rest are triple net, and maybe there's one random executive office, you've got three different types of leases that you're trying to juggle. So, what kind of solutions or suggestions do you have for people that, you know, how should they transition, and what are some solutions maybe that they could be thinking about?
Transition to a different type of lease structure, or
Yeah,
transition to a
yeah.
software?
Yeah, both. I think the software could be that transition, right? But even just thinking about positioning investment properties, because if they decide, hey, we want to completely fill up the building, we want to maximize it, get some good leases in there, but we want out. For them to transition
Yeah.
from three different types of leases in a property, an investor doesn't want to, they don't really want to wade through all that typically. They
Yeah.
want cleaner numbers. So I guess that's maybe some of my curiosity.
Yeah. So it really doesn't matter to us what type of lease they have. We're going to respect it for its current structure.
Okay.
Now, add an amendment time, if there's an open renewal option, that probably opens it up to doing an amendment to adjusting that type of structure.
Yeah.
What I would say though is once you have that data in Stratafolio, it puts you in a clean place to share that data. So one of the things that stops or slows down a sale is incomplete, delayed information that's conflicting. And so in Stratafolio, you can run a ret roll for just this building. You can see all of those lease escalations. You could easily export all of those associated leases, amendments, estoppels. You could even be tracking all of the property improvements that you've done to that property. So
That's amazing.
it's a complete product that you could share. So
Wow.
if you're at that place of, you know what, I've done enough to this property, I've got it stabilized where I want it, and I want to sell, it's exportable and an easy way to talk to that potential investor.
That's awesome. How long is your onboarding process? Obviously, it varies from building property to property, but what does that look like as far as someone that's trying to go from the old days into more automation? What kind
Yeah.
of time frame can people expect?
Yeah. We say to plan for 90 days. It should, and it varies wildly because we have clients who have 10 or 15 tenants. It goes pretty fast,
Yeah,
but we put an end time on it because we don't want it to go beyond 90 days. We want our clients in
yeah,
and using the product and taking advantage of all of the automations that are there. So we put a cap on it to say, we don't want it to go beyond this, because otherwise they're not engaged either.
yeah,
They've lost interest. And so we want our clients to come in, embrace the process, embrace the product, embrace changes to their operating ways, and really take it on.
yeah. And so, for those who are still stuck in that old mindset, what are some of the pitfalls that you see, the biggest pitfalls that when they're doing it manually?
We see this over and over again. They do miss those lease escalations. They just do. And if they're talking to lenders and having to pull information together and it's taking them a while to do that,
Great point.
that's just in the lender's eyes. And we talk to a lot of lenders because we have the same end client. For a lender, when you send over information in piecemeal and it's conflicting and it's slow, that risk percentage is
Mm,
going up,
yeah,
that interest rate is going up. So when
yeah,
you can confidently share data in seconds,
yeah.
that says to that lender or potential investor, you've got your act together. You're a
Yeah.
good risk.
Yeah, that's an incredible point. I'm glad you touched on that. So is there somewhat of a tipping point or a stage where people using spreadsheets and QuickBooks, what's that little spot that where it becomes a liability instead of a useful tool?
I wish I could tell you exact number. We truly have a client who has one unit. And the funny thing is this individual, we found a mistake that was over $100,000
Oof.
through our onboarding. He's paid for his product, our product, for years,
Yeah.
decades. He's doing quite well. But if you could have 5 commercial leases, but you have a full-time job,
Yeah.
then technology is a solution. If it is your only job and you have 5 leases, okay, a spreadsheet's probably
Yeah.
adequate. It really, I think you have to take into account what you're doing in life aside from managing this real
Mm.
estate. And if you have a full-time job and you have to be you can't be picking up your phone all the time. That's not acceptable for many employers. Having a system to collect that information about who has a issue that needs to be addressed. So it really just varies.
Yeah. Well, and that's why I think I hound my listeners about this all the time. Is why you need to have an expert and a professional in your corner because you don't know what you're losing if
Right.
you just don't know. And so,
Completely agree.
yeah. So, what are some of the warning signs owners should watch for before things just spiral out of control?
Are they invoicing? That's one of the first questions we ask,
Yeah.
because there are a number of people that we talk to who don't invoice because they assume
Mm.
that their tenant has signed a lease, a contract, so they
Yeah.
should know what they're supposed to pay. And that's fine if they're always paying. But as soon
Right.
as they don't pay, or they're paying late, or they're underpaying,
Mm.
then it's really hard to go back and track things.
Yeah.
And depending on what state you're in, it may be hard to even go back and collect on missing rent.
Yeah. And that's leads to my next question is like finding that 100% and getting more ROI through discovering these hidden invoices, not
Mhm.
hidden, but just missed.
Yeah.
How, how do you work with your clients to recuperate that or get them set up to where this doesn't happen again?
Yeah. So depending on the client, we will have they can go back and try to collect on some of the stuff from those tenants. It is a personal preference by each owner. Some will go back, some will eat it. And I would say more eat it than go back.
Yeah.
And there are sometimes, depending on how that lease is written, specifically around CAM, where 90 days has passed, your
Right.
opportunity has passed.
Yeah. Yeah. And I think a lot of some of these smaller to middle size owners, portfolio owners, have always done it on their own, don't know where their holes are. And it
Right.
sounds like this really, and I think it's always great to have separate set of eyes on anything that you do before you put it out, especially to a lender. Like if you're going
Mhm.
to get to refinance or do whatever, gosh, like you said earlier, piecemealing and it's all over the place. It's creating so much more work, not only for
Right.
you, but also for your lender or for the potential buyer to wait for all of this to come through and then sift through it all.
Exactly.
Yeah. So
Yeah.
can you maybe share like a specific example of how you've been able to discover these lost revenue?
Yeah. So when we're going back through, when we go through that integration, we're able to see all of the payments that have come in from that tenant, assuming it's been recorded correctly. Sometimes we're not able to, but we can see, let's just say I was the tenant, and we would be able to see what I have paid over the last 3 years.
Yeah.
And I can see in the lease also what I'm supposed to have paid. So when we see that, we see the gap. And so then we highlight that for that owner to let them know, hey, we've identified this. You should know that. So we line that up. We also, when we're going through the process, we look at how they're doing CAM reconciliation as well. I mean, my team, they're accountants, they're QuickBooks Pro advisors. They are professional people who know and understand commercial real estate from the financial side.
Yeah.
So when they're looking at it, they're giving our clients some incredible advice about hey, you're charging this for camp, but you could also include this.
Yeah.
So they could have been leaving that on the table and didn't even realize it.
Yeah.
Or sometimes we'll come across situations where maybe there was 6 months of rent abatement, but that does not mean that your additional rent or operating expense should also be abated. And
Correct.
sometimes we'll have to go back and say, hey, just so you know, you didn't actually charge for this, but you should have, you could have.
Yeah.
They can make that choice then to go back, but we see that kind of stuff. We see places where maybe they're being too granular on their CAM reconciliation. It's a balancing act about how much you share, but sometimes more is not better.
Yeah.
We believe in transparency. You don't have to share utilities for water, utilities, gas, utilities, electric, snow blowing, landscaping. Sometimes people will come in and they'll have 25 categories of those operating expenses. We recommend against that. Collapse it some.
Yeah. Generalize it a little bit more.
So
Yeah.
we'll give them that feedback because just it creates additional scrutiny that
Yeah.
if it needs to be shared, it needs to be shared. But
Yeah. And I think so often tenants are in the business of running their business, right? That kind of stuff can actually create more confusion and probably more tension in the future if there is too much information.
right,
And obviously,
right.
owners can provide further down breakdowns as needed. But like, how do owners typically respond when they realized the scale of how much income they've missed?
It depends on who it is that's involved because sometimes it's egg on the face of the person who maybe didn't bring the didn't have the concept of bringing in Stratafolio.
Yeah.
So that looks bad on them. So we try to approach it carefully, but some of them are shocked. And we've also had situations where we had a gentleman who, as we were going through the process, we noticed that there was an exhibit in the amendment that was missing.
Mm.
And so we went to the owner and we said, hey, this is missing. Can you find this, please? It turned out that exhibit resulted in this owner being able to collect $55,000
Wow.
on some back payments that were owed and pay for the product again for
Right.
years.
Yeah,
He was very
absolutely.
happy.
Absolutely. And I think especially too, as the market continues to change, which we are seeing, and especially with AI, and we've got to make commercial real estate has to make the shift. I'm no tech expert, but I also know that if there's these tools available to me, then why not use it? Because I think
Mhm.
people very often just look at here's the price tag of the product,
Right.
but what is the value proposition? And so maybe can you speak us to a little bit more of the additional value propositions that Stratafolio provides?
Yeah, we actually have a calculator on our website so you can run an ROI calculation on does it make sense or not. But how long does it take you to make sure that you're charging the right rent each month?
Yeah.
What doesn't a missed escalation cost you? What about the time that it might take you to run 50 CAM reconciliations? You could do it in an afternoon or you could do it in a month of trying to allocate time to do
Yeah.
it. So we save 80% of the time that it takes to do day to day operating activities.
Wow.
Plus, it's the security that you get from your lenders or investors when you're handing over information that's solid and complete
Yeah.
and quick.
Yeah. Yeah. I love that. You've mentioned one of the issues in integration, but was there another more unexpected issue that you found during a client integration?
Mm,
I think the exhibit is what
yeah.
a great example.
I'm trying to think about interesting things that we've seen.
Or any anecdotes that you think might be helpful to our listeners. Because this has just been like just blowing my mind because I've only worked with more traditional
Mhm.
property management. And
Yeah.
so to get to realize and to be able to go to my property management friends and be like, you guys. But I wonder if sometimes property managers that are working for a larger company or a medium-sized company that kind of does their thing, have you ever had any property managers feel like, are you trying to steal my job?
Sometimes we do have that. There is a resistance to some technology because they do feel threatened.
Yeah.
And what I'm sure if you like for companies who are wanting to grow, adding staff is not always the solution. But it is it is it's a redeployment of your efforts to something else that can add value to the company
Yeah.
because most of the time I just somebody yesterday I was talking to, they were talking to me about the hats that they were wearing and they kept referring to this hat slash this hat slash
Mm,
this hat, and it was all those, they referred to them as those slashes because they wear so many different hats,
yeah.
and so it makes it really easy for things to slip through the cracks.
Yeah. I think what I'm hearing you say is that this isn't really a threat to people, but it could actually be a tool to optimize what they're
Mhm.
already doing without
Right.
adding additional staff down the road just because
Correct.
someone's about to burn out or quit,
Right.
and then you're
Mhm.
retraining somebody. This gives that
Right.
reliability, that
Mhm.
consistency. Property managers out there, I treat this like a optimization of your time.
Yes,
Spend more time
exactly.
with the tenants and building the
Mhm.
relationship and building that community between the landlord and the tenants. And I think there's a lot of great opportunity if we can change our
Mhm.
mindset with the changing times.
Yeah, yeah, exactly.
So, in some of the early things that you discover, how do you turn those into opportunities for improvement?
For our clients,
Yeah.
yeah, as we're going through and we identify the things that they're doing, we'll make suggestions. They don't have to take our suggestions, but we share best practice on many different things. We've created a best practice chart of accounts for commercial real estate owners because just because you're in commercial real estate does not mean that you went to school for commercial real estate.
Correct.
And so many individuals are learning as they go and it's costing them as they go. And they're still making money, but they could be making more.
Yeah.
And our goal is to make our clients as efficient and as profitable as possible.
Yeah. Yeah. I think that's exactly what I feel like this tool, and I can't wait to go to your website and check it out. Is there
Yeah.
anything else that you would want to share with our listeners? Any stories, anything about you or Stratafolio that we haven't covered yet?
I think the one thing that I would say is that our team is incredibly dedicated to the onboarding experience. I think they take it personally when people don't just jump in and start using the product like we want them to because they are pointing out all of the ways that they could positively impact the bottom line.
Mm,
And so we're educating them as we go on invoicing, on CAM, on best practices around doing CAM reconciliation, best practices on recording things, constantly sharing
mm.
information that is worthwhile that should have a positive financial
Yeah.
impact on their business.
Yeah, absolutely. Jerry, thank you for being here. Where can people find you?
Yeah.
I know as soon as we're off this call, I'm going to go check it out.
Yeah, stratafolio.com. My name is Jeri Frank. You can find me at Jeri, Jeri at stratafolio.com. You can give me a call, check out our website, fill out a request demo form, and I will happily talk you through what we do and how we can help.
Awesome. We'll make sure that all those details are in the show notes when it releases. And Jerry,
All
thank you
right.
again for your time. I really
Yeah.
appreciate it for all the work that you're doing to impact commercial real estate.
All right. You take care.
Thank you. You too.
If today's episode gave you valuable commercial real estate insights, subscribe, rate, and share it. Connect with me and the David Commercial Real Estate team through the show notes. Remember, real estate is more than buildings, it's about building community. See you next time.